Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope all of you had a very good day of trading today. And in today's markets, guys, well, the S&P lining up its 7th day of gains in a row and eclipsing a new all-time high. The QQQ is not far behind, but not putting in a new all-time high of its own. But what you need to notice from today's action, guys, is it was another day of very broad market rally. Most of all your major and minor sectors were participating in the rally today, and the bulls are looking very good, which goes to reiterate the point that I was making over the last month of trading. The market does not like one thing, and that one thing is uncertainty. And when you remove the uncertainty catalysts from the market, it tends to just drift on higher and grind on higher, moving forward off of the back of positive economic expectations and positive earnings expectations from companies as well. Over the last month of trading, we've got through a number of uncertainty catalysts. The inflation was supposed to be an uncertain event. It came in very decently. The jobs data was supposed to also be an uncertain event. It came in quite decently too, and the bank earnings came off and wrapped it all out and said that the consumer was strong, the economy was strong, and the guidance for 2025 was also quite good, which leaves us on to our 7th day worth of rally, and the bulls just grinding on higher, putting in brand new all-time highs. So in today's video, guys, we are going to take a look at a few things together. Number one, go through some technical analysis on our major stock market indexes, take a look at the rotation, which sectors are doing better than others, and thereafter, we will also take a look at our big tech names in terms of if there's any levels that we need to pay close attention to leading into the earnings cycle over the next 2 weeks. And that's pretty much going to be it for today, guys. No portfolio review. That will be tomorrow as per usual to wrap it up with our weekly market recap after the Friday close. So a number of things to talk about today, guys. Let's jump right into the action, shall we? So the SPY up 0.55% today, the Qs up 0.21%, and the Qs, as a matter of fact, were somewhat of the industry laggards all over. Take a look at the heat map. You will see that big tech, although did put in some decent gains on the day, save for a few of the big components, Apple, Tesla, and Google. For the most part, it was the bottom half of the market really doing a lot of the carrying. This was not the case yesterday. Yesterday was a bit of a top-heavy market, but today we returned to kind of a more broad market rally, which is exactly what we like to see. Take a look at the last 1 week's relative performance, and only Tesla and Apple as part of the big names were down, but all in all, you can see a very healthy market's worth week of rally. Now, moving on to the one-day relative, you'll see that all major sectors once again participating led to the upside by healthcare. That's a strange component, right? Healthcare has been one of the biggest laggards so far to start the year and even over the last 3-4 months of trading, but they are now starting to round the corner into possible more price appreciation. So nice to see the sector recovery from there. Technology, the worst on the day. And for the 1 week performance, guys, pretty much everything in the green except for energy, but all major sectors now up at least about 2% plus on the week. So a very good market overall picture, right? So in terms of where we stand in terms of market rotation, I'll remind you the rotation right now is quite good. We've come off the lows. Percentage of stocks above their 20-day moving average is now at a cool 65%, back within the normal market range where it traditionally spends its time, now far off the fear lows as well. Moving into the percentage of stocks above the 50-day moving average, that as well has recovered very nicely, 48%, now off the fear lows as well. So you can see more stocks are recovering their longer-term moving averages, showing that the momentum is definitely pointing to the bulls right now. And lastly, percentage of stocks above their 200-day moving average, the longest moving average we like to pay attention to, are now back within the averages as well at about the mid 50% range, about 57%. So everything in terms of short, medium, and long-term momentum moving averages have been recaptured by the bulls, which is skewing the fear and greed chart from fear and even almost extreme fear that we were in the last week, now back to a much more manageable neutral. Market momentum has now switched from fear to greed back to the bulls. Stock price strength, net new 52-week highs and lows. We are now curling away, still in extreme fear reads, but curling nicely off the bottoms. And the stock price breadth, as we always take a look at the heat map as well, stock price breadth has been curling up from the bottoms that we've seen as well. So the market is kind of getting over the concerns that we had in the month of January as we get more positive data and more positive earnings and guidance from these companies for 2025. The economy should be strong, but the one narrative we have to still pay close attention to is, of course, the narrative of whether or not tariffs are going to cause meaningful inflation for the consumer. And that is something we'll have to keep a close eye on at least over the next 2, 3, 4, 5 months, because although these policies could be implemented as early as February, it does take some time for that to start to get priced in terms of towards the consumer. So we'll see the lasting impacts, whether or not it's a negotiation tactic, whether or not the tariffs will actually be done and how much. But so far and wide, pretty much all just speculation for now. We'll keep a close eye on those, however, over the next few months of trading. In other news today, guys, well, in other news, one thing that I do have to bring up before we get into the technicals, guys, is Project Stargate. So I didn't bring it up yesterday, but I'll bring it up today. This is a new project put forth by the Trump administration for the United States to stay on top of the AI race. They called it Project Stargate. So from Musk to Nadella, Satya Nadella, CEO of Microsoft, of course, Trump's $500 billion AI project stirs drama amongst the biggest names in tech. Obviously, because Elon Musk felt a little bit left out from the project, he had a few key words to say to his ex-partner, Sam Altman, when they used to work on OpenAI together. We know from now, guys, that they do not have the best relationship amongst those two people. They always go back and forth on Twitter and never really saying good things about one another, unless it's in a kind of very shady way, right? Kind of backhanded compliments sometimes. But let's get into the things, and let's not focus on the high school drama between these CEOs. Let's focus on what actually matters, the massive investment by the US government into AI infrastructure. So earlier this week, Trump announced a joint venture called Stargate with OpenAI, Oracle, and SoftBank to invest billions of dollars in ramping up domestic computing capacity to boost AI development in the United States. President Trump and his administration obviously recognizing that you have to be first in AI. If you're not first, you may as well be last. So they do want to stay that way at the current time. The executives committed to invest an initial $100 billion and up to $500 billion over the next 4 years for building out the infrastructure required for the large language models and much more computational power than that as well. Moving on further, the Stargate project was unveiled at the White House on Tuesday. SoftBank CEO Masayoshi Son, OpenAI CEO Sam Altman, and Oracle co-founder Larry Ellison were participating on that release. Son will be the chairman of Stargate, while semiconductor company ARM, Microsoft, NVIDIA, Oracle, and OpenAI will serve as key initial technology partners. And that has sparked a rally on most of these stocks over the past few days. You can see the effect that it had on ARM just in yesterday's trade. You can also see the effect that it had on Oracle in yesterday's trade as well. One of the big reasons for the Microsoft gain was additionally that news from the Stargate project. And all across the board, guys, pretty much some big gains for all the companies mentioned in that experience. So that being said, let's continue. Moving on further. On Wednesday, Salesforce CEO Mark Benioff suggested the investment plan could create tensions between OpenAI and Microsoft, who are close partners. This is something notable, guys. They have essentially dissolved their exclusivity partnership that they derived roughly about a year and a half, 2 years ago at this current time. I think it's extremely important that OpenAI gets to other platforms quickly because Microsoft is building their own AI. I don't think that Microsoft will use OpenAI in the future. They'll have their own frontier models, said Salesforce CEO Mark Benioff. They've said it very clearly that it's too expensive and too hard for them and that they want to have their own, meaning maintaining the exclusive partnership with OpenAI. That is why they hired Mustafa Suleyman and Mustafa Suleyman and Sam Altman are not best friends. Mustafa, of course, is the new Microsoft AI CEO as part of the AI division. He used to be the co-founder of Google's AI lab DeepMind, if you guys didn't know, to lead the new AI division now in Microsoft. And that's been the case for roughly the past year's worth of time. So there's a little bit of drama going on over here. Satya Nadella saying, I don't know whether or not what Elon Musk is saying is true, whether or not SoftBank has the 10 billion, whether or not the other companies, like just OpenAI, have the money to contribute to this program. Musk was bringing up that into question. And when asked about this, all Satya Nadella had to say from Microsoft is, well, I don't know about the other guys, but I'm good for my 80 billion. That was the quote that's really hitting the press everywhere over the course of the day today. So very interesting project and nice to see some collaboration amongst some of the greatest minds and some of the greatest companies in big tech right now. So that is the news about that. We will closely monitor this situation as we get more news on that overall. Now let's jump into some of the indexes, shall we? So this video, I'm going to keep it really short, guys, because nothing has changed at all. The context on the SPY was a daily downturn. We have the engulfing move. Now just keep an eye on your hourly time frame, guys. You will know when the bulls are done this rally when you see a loss of the hourly time frame into a lower low, lower high, lower low pattern, that means the hourly uptrend is lost and now an hourly downtrend. And then you will know the bulls are in for some daily consolidation. Anything at this point above 575, looking for a daily higher low for further trend continuation. And if you ask me, most likely the consolidation area will be between 602 and 596 to the downside. The moving averages are right there as well. So a little bit of a breakout, retest, and possibly run could be on the table for the S&P. At least the market breadth and the market momentum does favor the bulls in that respect. In terms of the weekly, we have a very nice weekly engulfing move after the downtrend. So even any extended sell-off here resulting in a daily downtrend will just be for a weekly higher low for a possible recapture of the weekly uptrend. Moving on to the Qs right now, the Qs up about 0.21%, not hitting their all-time highs, but same concept as Microsoft here, or Microsoft. Same concept as the S&P, guys. Big engulfing move. Eventually, when you top out, take a look at the hourly time frame. When you lose the hourly time frame, you will most likely be topped out and looking for a potential consolidation phase. Anything at that point above 500, looking for a higher low for possible further trend continuation. At this point, this level down here, 515 to 510, is a little bit far away. You may not get into that unless some of the big players in tech miss on their earnings next week. And next week, we have a lot of big players in big tech as well, guys, here. I can't really blow this up more than that, but you'll have to kind of bear with me. Next week, guys, a lot of big names. SoFi on Monday. On the Wednesday session, Tesla, Meta, and Microsoft, to say the least. ASML is there as well. Lam Research, another one of the big semiconductor players. On Thursday, you have Apple and the fallen star, which is Intel, unfortunately, UPS as well. And then, of course, the week after that, they're not on this chart, but in the next week after that, you have Google, Amazon, and another big players such as ARM, Qualcomm, PayPal, Chipotle, Spotify, tons of other big names. Next 2 weeks are going to be crucial. Next week, we also have Visa and MasterCard, which are not on this chart. So the next 2 weeks for earnings are going to be quite crazy. If ever any of the big companies miss, that's when you're probably going to get the larger pullback to 515, 510, but a medium-term pullback, maybe only all the way down here, guys. 520 for a little bit of a touch and possibly run. That could be in the cards. Moving on to the XLF right now. XLF not looking too bad. 0.61 to the upside. Big engulfing move right as well. Daily downtrend has now flipped to the bulls. A nice rally. As soon as this rally tops out, take a look. Watch for the loss of the hourly time frame and a meaningful loss of the 12 EMA. Here, they had an attempt. They could not get the actual follow through. So as long as you do not lose the hourly time frame nor the 12 EMA, the short-term control remains with the bulls, even if we are slightly overbought conditions right now. So when this move does pull back, looking for a higher low, anything above 47, looking for that higher low for further trend continuation. This area down here is a little bit far right now, 49 down to about 48, but we'll see what happens. All you need to know is watch for the size of the pullback, and when it happens, it could be a nice opportunity to go shopping for some of these names that are a bit left behind. Some names such as Berkshire, which is for all intents and purposes been in a range of consolidation since the month of, let's call it September. That could be an interesting name, but there are a few others, which I'll bring up in future videos, perhaps. Moving on to the healthcare sector. Healthcare putting a very nice continuation of the daily uptrend. And what we need to focus on, guys, however, is this weekly downtrend, which the bulls are trying to progressively reverse. So we know the daily uptrend is a very nice thing, but it's in the context of this weekly downtrend. So what we need to do now is measure the size of the bounce. The size of the bounce now, a over 618 bounce. So you know the bulls have a very good shot. And whenever this daily uptrend stops, right, they have a lot of space now to create some weekly higher lows to get the trend change. The same thing they did on the daily time frame. They got the trend change. Well, the same thing they need to execute on the weekly time frames at this point. Good thing though, now we've created a bunch of space above these lows, 136, and we are rejecting nicely from the area of support, which I remind you is 140 down to about 130, this whole prior range right there. So we'll see what happens with healthcare, guys, but there is a few key names that I've been paying attention to for some swing trades. Johnson & Johnson is definitely one of them to the upside. Stop goes below the low, and we're targeting all the way up here. And the other one I have a key eye on right now is UNH for the same concept, perhaps. You know, trade entry, a bit of a larger swing trade here, but the trade entry, stop loss goes below the lows right there, and you are going for the expansion back to the all-time highs. You see this pattern best on the monthly, whereby we're really just looking for some consolidation towards the bottom end of the range, looking for a bottoming out process, and maybe looking to attack. So this one could be a swing trade, but you might need a little bit better pricing if UNH comes down. It gives us a better entry, but as of now, not looking too bad. Onto semiconductors right now. Semiconductors performing well today, even though they were only down 0.12. They recovered a large portion of the big gap down move this morning, almost filling the gap completely in the last 15 minutes of trade. So not looking too bad. And I'll remind you the context. We are finally starting to break above this 3 months worth of range resistance area, 260 to 250. That has now become support for the short-term daily bulls. Daily uptrend is nice. Looking for the higher low. Maybe we got it today, but if we do get more consolidation, guys, looking for the higher low for further trend continuation. And the best pattern of them all, guys, is definitely on the weekly. 1 day left in the week, guys. If we close the weekly candle like this, this will be your official weekly candle breakout for the SMH, which has been sideways for the last 3-4 months. And that may consolidate into a nice new leg of a new weekly uptrend. And then if we want to take a very high probability trade, we go for the breakout, the retest, and then run this retest area, usually a very high probability for a trade. So semiconductors looking very good, and they're starting to come across, they're starting to come back progressively all across the board. Not yet, right? But ASML, slow recovery to the upside. Micron, slow recovery to the upside. LRCX, some of the bigger players here. LRCX, slow recovery to the upside. NVIDIA, starting to really recover nicely to the upside. And one of my favorite names as well, look at NVIDIA, pushing. And one of my favorite names, AMD, putting in new all-time highs today, guys. Just kidding. We'll look at that in a minute. Don't worry. So moving on. I had to do it, guys. Moving on further, and this is me as a shareholder, right? Moving on to the Russell. So Russell up about 0.46% today. Not the worst day for the Russell at all, but still struggling a little bit with resistance. 232 will be the highs of this resistance range. I'll remind you, that's the same resistance area from back in 2022 and 2021. And now we're looking to kind of progressively push through it, but no red flags. Big engulfing move. We know they had the daily downtrend. Big engulfing move. It's up to the bulls. Now set the higher lows and go for the daily trend change. If you break structure to the upside tomorrow, that will be higher lows and higher highs for the daily uptrend. Also moving towards the weekly engulfing move. If we can move past resistance, the breakout, the retest, and the run, the retest area is going to be a trade that I may be looking to get in again, because the last time that I did this one, right, it worked for a while, and then Jerome Powell kind of undid everything. So we'll see if maybe second or third time trying to break out of this area is a charm. Moving into the Dow Jones now, lastly, well, the Dow Jones has put in some tremendous gains. A lot of that is due to the banks and big tech coming back in a decent fashion, but all in all, got to call it how it is, guys. A massive daily upswing move, engulfing move for the bulls. So as soon as we get a little bit tired and lose this hourly structure uptrend into a downtrend with a combination loss of the 12 EMA, you will know that that is signaling daily consolidation, and then you'll be looking for a higher low. Anything above 41.8, looking for a daily higher low for possible further trend continuation. So if you ask me my best guess where the pullback area could be, well, if I derive a little bit of a box right there, it's probably going to be these guys, right? The areas that got tested the most frequently as of recently around that range. These guys, well, we're probably looking at the moving averages being there as well. So 43,000, 43.5 might just be the pullback area in the worst case scenario, because that would be a fairly big drop from here, 2 to 3%. And the Dow Jones, for the Dow Jones, 2-3%, I mean, it would look like a consolidation phase like this, right? Nice little breakout, retest, and run. Kind of looking for the exact same thing right here. So we'll see if it happens, but the weekly chart is definitely looking fantastic. Weekly downtrend engulfed immediately into a brand new weekly leg higher. So looking very healthy overall on most of your major indexes. Nothing to say there. Yields are still just moving the exact same. Nothing new, no new changes to report. We're still looking for the daily downtrend conversion, the conversion into a possible head and shoulders, and essentially what we're looking for here is the rollover on the weekly, right? Eventually we'll have to roll this weekly over, set the lower high, set the lower low. So kind of similar to what we did back here, right? It took a long time, but it did happen. And I'm kind of expecting the same thing. I'm expecting more of a move like this rather so much than a move exactly like this, but we'll see what happens. Yields are still slightly elevated and the bond trade is somewhat ready, but as I've been saying, guys, if we want to take this bond trade for the lower, for the higher low and the expansion, we can do it, but you got to be very patient with this one, especially if you're trading a 3x leverage product like TMF. They just hate sideways action altogether, guys. So you may as well put, at least a year's worth of time on those call options if you really want to put all the odds in your favor. Not financial advice, just what I am probably going to do for my own trades in that respect. We can go over Bitcoin a bit, but not much has changed. We'll cover Bitcoin very briefly. I'll do a quick summary of crypto more tomorrow. tomorrow. But Bitcoin, all you need to know is we're holding the support range, right? 101 down to about 98. We're just kind of hovering above it after struggling with it to the upside. Now we're using it as support to the downside. All in all, the bulls still remain in control, looking for the daily higher lows for expansion. Just pay special attention. If we lose this area, we'll be losing two things: a very large area of support, the momentum from the breakout, and we will also lose the daily uptrend, which could just be signaling we're due for a little bit more weekly consolidation and a little bit more tightening up of this range. What Bitcoin is really looking for at this point, guys, they're looking for the SBR. They're looking for the Strategic Bitcoin Reserve headlines. And if they don't get the headlines, you're not going to get the absolute moonshot that people are waiting for. Bitcoin will most likely grind higher with the rest of the asset markets over the year. But if you're looking for the big moves, guys, well, the big moves need big catalysts. And the big catalyst that started off this move back there was President Trump being elected into office and all the speculation around a strategic reserve, the decommissioning of Gary Gensler as the chair of the SEC, and a number of other different things. Elon Musk, of course, heading Doge. That led to some very nice initial rallies, but now to get the follow through, well, you need to follow through on some of those speculative things that the market wants. And the main one is the Strategic Bitcoin Reserve. That will be your God candle. So keep a close eye for that. The rest of crypto, not really moving. We'll cover it more tomorrow. Just keep an eye on your dominance, guys. If you want to know when the altcoins are going to rally, you need to see some real big breakdowns on the Bitcoin dominance chart. Moving into the big tech names now. So Apple down about 0.08%. Not the worst day for Apple, not the best day either, but I did close my short put position at the 222.5. If you guys wanted to know, I'm not keeping it into tomorrow, not taking the chance. We close it pretty much very early in the morning for some profits. The only reason I don't want to keep it, guys, is because earnings is next week, and I do not want to be assigned here, even though I can get some good covered calls for earnings next week. I would rather just reset my strike lower because of how volatile earnings can be. So if I can take this one out at a profit, even a slight profit, I'll do that. I'll reset for the lower strikes next week because this was nice for a swing trade, as I was saying. Nice for an initial bounce proposition on Apple, and we did get the bounce from the lows. Some of my Discord members did a very good trade here early on in the week when we came down here. Some of them wrote the 217, some the 215s, and everybody's out at a very nice profit right now. So now we get to have buying power to possibly go shopping for some Apple on the dip. Now, in terms of the Apple dip, the dip does simply continue at this point. The daily downtrend is clear as day. And even if we do continue filling on this gap, there's overhead resistance 231 up to 236, which is all these guys from back there. So even if the bounce can be nice, which it is not right now, I'll remind you, if we roll over from here, this bounce is extra weak, guys, only a 38.2% bounce. So keep an eye on the hourly time frame, guys. As of right now, the bulls have not lost the hourly time frame. As you can see, we have not lost it, but if you break the lows of today into tomorrow, that will be hourly downtrend. That'll be, unfortunately, the end of the daily bounce, and you may just be revisiting the lows or even lower. Myself, personally, guys, into earnings and after earnings, I really would like Apple. Let's call it 205 down to 200, guys. I do not like the valuation of Apple all the way up here, considering their flat revenue growth. They're trading at a very high 3 peg. Still a fantastic company with fantastic products, but this is a very good company, but I do not like the stock price right now. So if I'm going to play it further, I need to get the possible absolute best price. And for me, I would only be comfortable, playing Apple with size closer to about $200. But as of right now, it is holding up that weekly support. So we will definitely see what happens in terms of that. And we are still oscillating around daily oversold, but they have their earnings next Thursday, guys. So not too many days of price action before then. So we'll see what happens. Moving on to AMD right now, hitting the new all-time highs today is AMD, of course. Well, only if you look at this portion of the chart, look, we're at all-time highs of the last 2 weeks of trading, of course. Now, in terms of the rest, well, unfortunately, you guys know the context, right? Been saying this the whole time. Monthly downtrend, weekly downtrend. Everybody knows that, guys. Everybody has a pair of eyes. But what is the proposition for buying the stock all the way down here? Well, I'm glad you asked. You have to talk about the valuation, guys, right? So the revenue and EPS growth rate is very good. The PEG ratio right now on a forward basis is very good as well. The PE ratio may seem high, but you have to factor in that they're growing the EPS at 35% per year. This number does not tell the full picture, which is why we use the PEG. And in or around a 1 PEG is very cheap for that amount of growth for the company. I'll remind you what the sales pitch for AMD is, because some people like this company and they want to go for the thesis, and some people absolutely hate the company. I'm not here to say that they're better than NVIDIA. They're not. Everybody knows that. We're going for second place here, guys, right? The average analyst price target, it's much above the stock price. Their revenue is expanding very nicely over the next 4 years, and their EPS is expanding nicely, as well as their free cash flow and their gross and operating profit margins. All that being said, that is all factoring potentially only having 5 to 10% market share of the data center landscape. So it's not a very big ask for AMD, what we're asking from the company, and I do think it's a very manageable proposition. That being said, lower support area is 113 down to about 98. They do have their earnings coming up, guys, next, or rather in 2 Tuesdays from now. So the price action for AMD may be a little bit muted because it's a show me company right now. Wall Street wants the company to show them the gains, show them the revenue, show them their EPS, show them the free cash flow, and show them the margins. And AMD should be able to do that over the next 2 quarters. So as of right now, any extended dips and big red days, I'm a big fan of writing puts or selling puts below the support area, preferably as close to the 110 as I can get. And I will keep doing that moving forward. But as of right now, the bull's still with a lot of work to do here, guys. First, we need to reset the daily uptrend. Then we need to reset the weekly uptrend as well. And then only then can we talk about a possible reversion and going for maybe a monthly rally. But as of right now, a lot of work to do for the bulls. Curious to see what they have to say for earnings. Moving into Amazon right now, Amazon up about 0.17%. Nothing really to see here, guys. Amazon just doing Amazon things. Daily downtrend into big engulfing move. The chart looks primed for some expansion, potentially all the way 240 or 250 is the next psychological target for me. That being said, the bulls do not look tired right now, although we are hourly overbought. Just pay special attention. As long as we don't lose this hourly time frame, nor the 12 EMA, the bulls are in full control of this short-term move. And even if we do lose them, guys, ton of space, anything above 215, looking for a breakout and a higher low and possibly a further rally. If you ask me where we might pull back to, we'll just use all of these this candle structure from the past few weeks, right? Where we're struggling to break out of, that is probably where we're going to use as support. So 229 down to about 225 for Amazon. Could be a juicy little swing trade here, even with earnings. If you ask me my opinion, I think Amazon is absolutely going to crush it. Amazon is not the 30th of January. TradingView is wrong. They're actually the first week of February. A little bit of breakout, retest, and run could be a nice little opportunity for a swing trade for some Amazon breaking beyond the all-time highs. And the fundamentals of this business are equally as fantastic. They should have a great year. And just looking for weekly consolidation into follow through for the bulls, looking fantastic. Moving on to Google. Google down about 0.22% today. Google with another, what can I find it here? Oh yeah. Here we go. Epic Games takes on Google Apple with third-party games on company's own app marketplace. So Epic Games once again coming into the ecosystem for Apple and Google. We know that they've been having some issues with them in the past. And we also have one, I don't think I could find it here, but once again, Google and Apple were under scrutiny by another regulatory body this afternoon, which caused their share prices to drop from the highs of the day. And Google pretty much took that news on the chin and then kind of just rallied back to the highs. So Google not looking too bad, guys. I'll remind you, the best proposition for this company has to be the valuation down here at a 1.43 peg with all this revenue and all this EPS growth, with all the cash, with all the buybacks, guys, with the growth of the cloud business and the growth of the advertising business. It is looking quite good for 2025 for Google, not gonna lie. That being said, we're kind of using the prior all-time highs as a form of breakout retest, nice daily uptrend, trying to use the lows, trying to use the 12 EMA as well as a short-term guide, build a quick base of support. Could we be due for a possible momentum rally into earnings? Well, that is going to have we're going to have to see, essentially, is how I'm trying to structure that sentence. Apologies for that. Kind of had a brain fart. Moving forward, guys, looking for the daily uptrend continuation. Google is looking fantastic right now. And weekly was also some form of a tightening range of accumulation. And now if you do get that weekly close breakout above 200, it's going to be looking really good for continuation into psychological 210 and eventually 220. The only thing that stands in the way is, of course, the earnings cycle. But I'm not too nervous about that. If it comes down, I will be buying the dip. But as of right now, Google looking good for possible breakout and continuation. Moving on to Meta right now. Meta also with the break almost almost new all-time highs. Meta looking absolutely fantastic, 2% up today. Daily uptrend continuing right now, breaking through the highs. And I'll remind you, if they cannot get it done, just focus on these lows. 590 is the lows. They've been acting as good defense back here for the bulls. Previous resistance, current support, and now looking for that trend expansion. Meta should also be having a fantastic year with record profits this year overall as they continue focusing on the efficiency of the business. And their advertising business, guys, is going extremely well. Weekly uptrend has just been riding this 12 EMA, arguably for the last 4 or 5 months of time. And the chart just looks absolutely primed to hit some key levels over the course of this year, guys. Talking maybe 700, 750 is not out of the cards, because I'll remind you, even at the all-time highs, even right now, it must be trading at about a 1.9 peg, not even a 2 peg. So it's not cheap, but it's also not egregiously expensive as something like a Palantir is, right? So Meta is looking absolutely fantastic. I do still have a lot of Meta in my long-term portfolio, and I'm not planning to sell any soon. It's just starting a position here with full size is not the best risk to reward if you have a short-term time horizon. But if you have a time horizon for the next 3, 4, 5, 6 years, I think Meta is going to perform very well in the current landscape. Moving on to Microsoft right now. Microsoft up about 0.11%. They were having a little bit of a red day early on in the morning, but recovered a lot of that and now closing at the high of yesterday too. I'll remind you, the context was this daily downturn on Microsoft, big engulfing move. Higher low was set with this little candle right here. I don't know if you can see this guy. He's kind of trapped in the red support zone, or the red one. There used to be resistance. Now it's support, right? Higher low and higher high looking fantastic. If Microsoft rolls over from here or rolls over from the resistance of the previous 52-week highs, that may be a condition for a little bit of a pullback. You'd just be looking for a higher low. Anything above 426 looking for a higher low for further trend continuation. So if we move up a little bit higher, you can probably use these guys, 440, as the fallback area potentially. But if we pull back from here, then the logical area that we're going to be using is the area we just left out from, which is this resistance range. As you can see, very powerful location. So if we do pull back from here, most likely we will be using that 435, 430 initial now support zone below us as kind of the touching base area for the bulls to build a bit more momentum. But look at this weekly, guys. And I've been saying this for a few months now at this point. When Microsoft gets its butt in gear, when it chooses or when it decides that it wants to run, it will probably go on a big run. Microsoft can consolidate sideways for quite some time, but then sometimes it just breaks out and never looks back. Is this going to be the time where that happens? I don't know, but I have been positioning for it at the lows, and hopefully you guys have been too. Moving on to Netflix right now. Netflix also up 3.24% today, looking very good. Maybe they test the $1,000 level again before the end of the week tomorrow. Looking good, though, after those earnings, right? So obviously the context was this big sweeping daily downtrend, which has since been undone. Big engulfing move. Looking for the higher lows. But, one day is all they got. They could, and the Bears could not push any lower than this before the Bulls trying to just recapture these short-term time frames. So, you would assume that if they want to fill the gap, they should do it sooner than later. Because if you go all the way up here, well, then you're going to need a pretty big bearish catalyst or the whole markets to fall apart to come back and fill this gap. So I do still have a penchant for filling the gap sooner than later, but we'll see what happens, of course, guys, right? If they do pull back from here, so much support, 932 down to about 904, this whole area will be big support for the bulls. The moving averages are curling up there as well, so that could be a nice area. Of course, to the upside, resistance has to stay put at 1,000, and then you go psychological, 1,050, 1,100. Those are going to be your next targets because right now it's a blue sky breakout, and the weekly chart is looking absolutely fantastic for this weekly breakout momentum. But obviously, guys, buying it here for follow through, it's a little bit of a gamble, right? It's not the best risk to reward at all because you have no defined price targets unless you use fib extensions and stuff like that. Of course, it's just not the type of trade that I'm interested. I'm a breakout, pullback, and then run trader because you can get some better entries and you can have more defined stop loss levels. Moving into NVIDIA right now. NVIDIA up about 0.10%, not too bad on the day. Trying to retest the all-time highs is NVIDIA right now. So we know the context is this big sweeping daily move higher. Still no daily uptrend though. That would be setting a higher low for higher high. So if NVIDIA cannot breach this area of resistance, the top end of which is 147, the lower end is 142, and we come a bit lower, just understand anything above 129, looking for a higher low, and maybe a second attempt at breaking this. That is if we don't just smash through it over the course of the day tomorrow. The resistance, of course, is 152, and then, of course, the psychological 160 round number. Looking very good on NVIDIA, guys, after roughly 3 months, 4 months, 5 months of consolidation, roughly 3-4 since the month of October. Consolidating for a while, it's given ample opportunities for everybody who wanted to get in, who was not getting shaken out by the rest of the market. Multiple tests of the 26 EMA, which NVIDIA has barely lost the entire time it's rallied since the AI narrative started in 2023. So you got to pay attention to these things, guys. The bulls never lost the structure, and also the monthly was always looking for a higher low for further uptrend continuation. So is it here right now? Once again, I don't know. It looks very good, right? Even for the breakout, retest, and run trade. But if we get rejected, just understand a lot of support in the lower range down here, starting at about, all these guys started about 135, but the more solid area, of course, is the 130 to 125, where I want to be writing puts as close as possible to. Moving on to Tesla right now, down about 0.66%, but Tesla does have earnings coming up next Wednesday. So as I said, the price action and the volume may be a little bit muted because there's a lot of people who want to see that this report is going to warrant blast off to the all-time highs because they're reporting absolutely ridiculous numbers. Or maybe the share price has to taper back a little bit because the earnings report was underwhelming, and maybe people start to question the valuation again. I'll remind you, the valuation of Tesla, and I'll say this myself as a Tesla shareholder, I personally think that the Tesla intrinsic value is somewhere, the fair value of the company is somewhere around 250, considering the next 2-3 years of growth. I'm not considering the expansion of the robotics division, the expansion of the robotaxi network over the next 5 to 10 years. That's the longer duration price target, right? But as of right now, until those things materialize, because they haven't materialized yet, right? We don't know the scale of operations. And we don't know the speed of which they'll be deployed at either. We only have guidelines and schedules. But until they're real, the fair value of Tesla as it stands right now for me is about 250, which is well above the current price right now. And the PEG ratio, we did the PEG ratio earlier at roughly 97, and it was very high, even at 250. So you can imagine at 400, it's really not the best, right? That being said, this one is not running on valuation right now. It's running on momentum and the bromance between Elon Musk and President Trump for deregulating for the robotaxi network. That being said, new daily uptrend for the bulls, looking for the higher lows, anything above 377. Higher low for possible further trend continuation. Not looking too bad. Just pay attention for the earnings, guys. If we lose 376, it is a weekly downtrend. You may need to find further support down there, 360 to 330. All in all, not looking too bad. If I will be playing Tesla before earnings, and I'll show you what I'll be doing, but closer to earnings. I'm not going to take any positions until we get to maybe the day before earnings, because the price will move and give us more defined levels. Moving on to Palantir right now. Palantir recapturing more levels today, and oops, daily downtrend into the full engulfing move by the bulls, looking very nice. Keep an eye on the hourly chart again. When you lose this hourly time frame and the 12 EMA, this is why I love the 12 EMA, guys, right? Short-term momentum guide, when you combine that with the price action, higher highs, higher lows, you usually get a good idea when these things top out. So if we do top out anytime soon, we're looking for a higher low. Anything at this point above 63.75, higher low for further trend continuation. If we do pull back, probably heading down here, 72 to 70, the baseline of this support level as well, and the moving averages are there as well. Maybe something like this if my Picasso drawings are very good, and that would be some form of an inverse head and shoulders. Maybe Palantir is heading to $1,000 by tomorrow morning, 9:35. Just kidding, but $80 may just be in the cards sometime soon. Palantir's looking good. I'll remind you, they never lost the weekly uptrend. Higher lows are set. Possibly looking for that expansion, $85, $90, $100, maybe sometime through 2025. And lastly, SoFi. SoFi up about 2.5%, not the worst day for SoFi at all. They have their earnings on Monday, and I will be positioning into SoFi for their earnings, probably writing some short puts around the 15.5 level to pull back there if we pull back from earnings. But I'm probably also going to load some call options for June of 2026. Out of the money, I'll go for it for the $20 leading into earnings. If we can get that break, if we rely on the bank earnings. I know the actual position timing for it was back there, but keep in mind there was a lot of uncertainty in the markets back then. Not too sure what banks were going to guide for, not too sure of the consumer's footing in terms of their loan management. Now we have all that guidance. So although we have sacrificed a little bit on the timing, at least now we have the direction and more clarity, and we've reclaimed the level. Daily downtrend has now been into a nice daily engulfing upswing, looking for a higher low. But I said tomorrow is the last day of trading before earnings Monday morning, so we'll see what we get. Maybe we will not even get the breakout retest into tomorrow. Maybe we just continue rallying and then it'll be here, and then earnings is going to be the decider, right? But all in all, SoFi looking very good on all time frames. The weekly showing very nice expansion. Next price target, of course, is that $20 psychological, and then you just go with the previous ranges, which is 22 up to about 25 all-time highs. So that is everything for your market review, guys. Bit of a shorter video. Hope you enjoyed that. If you like this rapid fire format where I spend less time, less explanations on things, leave me a review down below which one you like more. The longer videos, the shorter videos. It's two different styles. I try to convey almost the same information, but this one is a little bit more rapid fire for you. It entails that you need to know what I've been talking about the last few videos to really internalize what I'm talking about today. So if you like this style of video, leave it down below and I'll try to do more of this style, the shorter style. So if you like the video, consider dropping a like. Would appreciate it for the growth of the channel. Also, please, 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 I'm begging you, subscribe to the channel. I'm almost at 5K. And then you can unsubscribe if you want to, and at least I'll have my 5K milestone. For subscribers, thank you each and every one of you for bringing me here. It's been a pleasant journey so far. And if you have any questions, guys, I'll be answering a ton of questions tonight. So make sure to leave me one of your questions down in the comment section. I'll get back to it. And in the event that you want access to the private Discord, the private trading group that I host with about almost 200 of you guys in there already, where we do all the live trades. You'll get access to all these trades live, the wheel trades, the leap call trades, the debit spreads, the credit spreads, and everything in between. Well, the link to the Discord is down below. We also do private morning live streams every morning for about 2 to 3 hours where I trade live and answer your questions. And I answer your questions all throughout the day as well. We do private videos in there as well. I share all of my watch lists, all my charts and everything like that. If it interests you, the link is down below. And that's pretty much it for me, guys. Take care. I'll see you tomorrow, and peace.